Okay, boys and girls, going to be going to Ask Scruff, and it's quite an interesting question, and it's not a quite simple answer either, which is what I like, because ultimately trading is not as simple as you think it is. It has its moments, but you've got to be able to read a narrative inside it. So let me flick this over and I'll show you. So let me show you the question first. So if we come here, I'm going to actually bloody look at something here because it made me chuckle. He says to his girl, if you don't eat chocolate for 3 weeks, he'll give her a free haircut. Don't be encouraging Joanne. She has enough trouble bloody getting me killed as it is, without you giving her ideas, you good looking little swine that you are. I do love him to bits, but I also hate him because he's a good looking sod. But there we go. So he's a bit of a naughty boy, and he's naughty as well because he asked this question. It's not naughty, it's actually a great question, Jimbo. When the USD goes up, in theory, what it's paired against, sort of like euro dollar, pound dollar, will go down. So should gold. Yes, because it's closely correlated. But when he sets them side by side, he doesn't seem to see it. So let me just show you. There's here's the drivers that we kind of looking at. Now, I've got 4 charts on here. The one under my head, this one, is gold. Then we've got the USJPY into cable, into FTSE. Now across that narrative, there is a connection, okay? But you've got to be looking at the right time frame as well. And you want to be looking at high time frames when you're looking at correlations mainly. And that'll be your dailies. And you certainly, if you're looking at them, don't want to go below an hour. But the dailies will give you a good idea of what that narrative is. So if we look at this, the narrative of gold, it's pushed up heavily and now it's slamming down heavily. Right, well, if that's the case, what is the closest correlation to it? Well, it's the USJPY. So as that's pushing down, this is actually pushing up. This big here, and you can see it. But now look at this, and this is where the confusion may lie. This here is in a consolidation phase from an upward move. Let me make it a bit bigger and I can show you. So if I just crunch this in, you would say that is going up. You know, it's come up, it's resting a bit, and it could push up into the next part. Okay, so we'll drop that back. But if I look at gold in a similar scenario, let's have a look at this and see what's happening with this. Well, gold's actually going the other way. So gold's going down and the US is going up. And you can see that from the high and then the lower highs and the lower highs. So you can see that narrative was moving down, whereas the other one was moving up. So they're correlated correctly. Okay, gold's coming down, this is pushing up. Well, if that US is pushing up, that means it's going to put pressure on the pound that it's paired with, forcing it down. Well, if we drop this back, I don't think anyone can say that isn't going down. Well, if that's going down, that means business is pretty darn cheap in the UK, which in theory should be moving this up. Well, let's take that off so that we can see it and crunch this up. Now it is range bound, but the FTSE is kind of range bound most of the time. That's heavily moving up, but there is a problem here, and that problem is these high peaks. So this is either going to continue to break them, but we've got a UK economy that's in the pan at the minute, which might explain why that's running that way. All right, so it's loosely correlated to the rest of it, but it can give you a good barometer as to what's going on. So let's just look at this across, and we'll kind of Well, I'll leave that alone a minute. So if that's going down, that one's going up, right? Well, if that's going up, it's definitely going to force this down. And then the lower this gets, the more attractive that'll become. Okay? But in essence to the question, the last part of the question, if I put this back up, is what is the answer to this? Well, the answer is very simple, my friend. The correlations just give you a global picture of what's going on and an idea of sentiment. Is this going to weaken? Is this going to strengthen, etc.? You trade what you see. Excuse me. And what I mean by that is, just because the USJPY is gathering in pace, don't think for a second that automatically gives you a short on cable, because cable might find its floor and then bounce up, and it might find the floor before USJPY finds its ceiling. So what you do is you just look at them to see that there's movement moving around. Yeah, the US is moving up aggressively, which means it's going to put pressure on the pound, so that'll move aggressively as well. But aggressive moves also have aggressive retracements. And because these correlations come from dailies, etc., you could have a retracement for 3 or 4 days, and you might end up on the wrong side of the trade. So the easiest way to do it, it's a little bit like strength. You look at it to see if there's big movement. Well, if there's big movement, there's big opportunity. And that opportunity can come from either direction based on what you see at the time, because we work from hour to hour. And if you sort of, and I see it all the time where people, they're looking for direction on 5-minute charts and 15-minute charts. Suicide. Absolute suicide. Look in the bigger picture and then use the smaller time frames just for your entries, and you'll find trading becomes a hell of a lot easier by trading what you see. Hope that makes sense in a strange way. We'll visit this a lot more inside the Zoom calls. So when we do Q&A this week, just pull it up and I'll pull the charts up for you. No problem at all. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.